Let's analyze together Big Bear, but before that, read the disclaimer right here in the video description below. First of all, guys, remember to subscribe to TNT to watch more content like this. Right now, we are watching the correction, that we were, actually in the previous video, we were mentioning that a breakout in this pattern could mean a trend reversal. And actually, this is like, it could be taken from a book. Here we have the breakout right here, and here the retest, it tried to make new highs, it couldn't, and now it's going down like crazy. So obviously the key question here is like, what should I do now? What's gonna happen next? Here we have a support level, it could be feasible that it could reach the 5.20 area, and after that a new upturn. It depends on the fundamentals, and actually we're gonna see the fundamentals of this stock. But before that, we're gonna see the breaking news, because here we have three pieces of news that are kind of interesting. So first of all, guys, we have here Big Bear is thriving in the domestic market with its advanced AI solutions. Guys, remember that this is like they are being hired by the government, by the US government, for AI solutions. And so this is very important because right now they are investing a lot, in terms of national security. So this stock is, profiting from that particular investment. At this point, what we have here is like with an array of commercial and software solutions like, PanJam, threat detection, Veriscan. This is the products that they offer: Two-Face, Pro Model AI, Conductor OS, and SafeGuard.ai. So they have a lot of products, interesting products, and right now they have a lot of demand. So that's positive, and probably one of the reasons, that we have an expected earnings of minus 0.06. So still, we're talking about losses, but if we compare the data, to previous, income statements, we have to go to this area, between July 2024 till November 2024. It's very interesting, at that time they had a reported earnings of minus 0.05, minus 0.05 again, both times. The very same net income, not the same, but very similar, minus 11 million the first one, and the second one minus 12 million of net income. So we're gonna get similar results to that. The interesting part here is like these two income statements created this incredible upturn of more than 276%. So it's important to notice that right now we are not at the very same level. Actually, we're trading way higher, and we're gonna get the very similar results. So right now there's a difference of 300% in comparison to what happened after the release of the second income statement back in November 2024. At this point, in my opinion, and this is my opinion, of course, it's a little bit too risky, because obviously the opportunity is better when you buy it right here, and I'm gonna show you why. So we're gonna exactly analyze the trend at this point, and look at that. This is an area of accumulation distribution process right here. Here you can clearly see that investors, smart investors actually, started to buy the stock around this level, and you see that they are not making new lows. So this is a pretty stable area to buy and accumulate, and then you get this upturn. This is very normal in this type of situations. It's like when the net income is changing and it's improving. Still we have like a lot of pessimistic before the upturn, and here pessimistic visions in that sense. So you can clearly see right here the negative net income that was previously stated back in March 2024 was like a very bad earnings. At this point, it's very risky to buy, and this is what you think, it's very risky to buy in a company that is facing such losses. But at the same time, you have a better net income. So if you are brave enough to buy around this area, you can get this profit. And at this point, it's not the same thing, but still, it's improving. We're gonna see exactly the forecast to confirm, overnight that. The important thing here, and this is the most important factor, we have to go to the annual forecast. And the annual forecast, look at what happened back in 2023, like a minus 0.40 of EPS. Look at the reporting and the estimate. We're gonna get similar numbers this year actually. So if we go to 2023, this is very important. At that time, it was trading at $1.2 to $2.50, something like that. Right now we are trading 3 times higher, and we're gonna get very similar earnings. That's why I don't like it. It's like it was better before in that sense. Right now, it's a little bit more risky, and we can face a downtrend. It all depends on the upcoming earnings. So if we have the forecast right here, and we go to the quarterly forecast in the EPS and revenue, the next one is gonna be as the ones that I mentioned before, back in 2024. So that's good. But what's gonna happen next? If we get these very similar results, it's not bad, but it's not good either. We're talking about very similar earnings, but all of them are in losses. That's why I don't like it. And when I invest in a stock, I try to find positive net income, or at least that is like an estimate of positive net income in the coming future. At this point, in order to see that positive net income, we're not going to see that, not even by the end of 2027. So that's why I don't like personally this stock, because we need to see a positive net income, probably maybe, I don't know, by the end of 2028, but it's a long way to go. We're talking about 3 years. Are you going to hold a stock for 3 years hoping that it's going to get like positive net income? I don't think so. It's better just to find better investment opportunities. But at the same time, if you are brave enough to invest at this particular point, maybe after a correction, when it goes back to $5 and you invest it right there, or maybe even better, if it goes back to this line, this red line that is trading, probably the retest will be $3. So if you buy at these two areas and you hold it for a long period of time, that could be different. Obviously it's going to be difficult to find this opportunity, because at that time the net income was minus 127. It's not expected, to see these earnings again, not even in the coming future. We go here to the forecast again, and you can clearly see these negative reporting earnings that are so bad, and we have three right here. It's not expected to see it happen again. So that's the thing. Probably it won't go back to 150, but it could go back to 3. It could go back to 4. And at that area, look at the point of control right here, the volume profile. This is the most traded area of this stock. It could go back to $4, and that's a better opportunity than this one. Right now it's very risky. We're talking about the upper part, of these trends. Every time it happens, a big correction follows. Here we have one, here we have the second one, the third one, and probably the fourth one. So that's why it's better just to buy at the lower part, just before not before the upturn, because it's impossible to catch that one again, but probably near, at the beginning of the upturn at that point. So probably levels such as $4 and $3 are the best one in terms of risk management. But at this point, obviously, imagine that you buy right here and it goes down and you're facing a minus 60%. That's a huge risk. Also, we have news regarding the competition that we have with this one, because there is another stock which is Veritone, and there are investors saying, "Hey, is it a good one? Is it the best alternative to invest in a similar sector than BBAI?" So if we go to this stock, we're actually watching it right now. It is completely ugly. It's like even you activate the logarithmic scale. Maybe the good thing is it's trading at the lower part. We didn't enjoy such an upturn in comparison to Big Bear, but at this point, look at the incredible downtrend that we have here, long-term downtrend, very strong, and then the support level. So obviously you can buy here at the lower part and then at the breakout, but as you can see, it's not the same thing as Big Bear, and actually the net income is completely, negative every quarter. Maybe we didn't experience such a bad quarter as the ones that we saw before with Big Bear, but it's still very negative numbers. It's not positive, and probably the market cap is just 100 million. It's like 10 times less, in comparison to Big Bear. That means that we could experience a lot of volatility. So in that sense, it's best always to invest in a stock that it has like a better market cap as this one. We are talking about 2 billion market cap, probably a little bit overbought, but at this point it's still better than the other stock, that we're talking about. Last news that we're gonna read right here, they are facing a class action lawsuit, so it's important to notice that obviously this is not positive for a company, experience this, but still it's a long way to go. This is just the beginning. It could take a while. So it's not worth it, to have this into consideration yet at this point, but we'll see. Read the disclaimer right here again, and also remember to read the disclaimer in the video description, and remember to subscribe to TNT and leave your comments below, and see you in the next one.